Now the big question is, why am I not looking at these down close candles as a valid bearish order block? Hello traders, I trust you're doing great. In this video, I'm going to show you two ways to find a valid order block that you can use for your entries. After the end of this video, you should be able to catch a move like this, and like this, if you truly understand what I'm going to break down in this video. First thing, I'm going to start with the schematic for the first type of order block. And the schematic is very simple. If you look at the diagram on the screen currently, you see that we have a short-term high here, we have another short-term high here, and we have another swing high up here. Whenever you have a short-term high that is lower to the left, I'm talking about a short-term swing high now, lower to the left like this, and you look to the right, you see another short-term high that is lower. The swing high at the middle is a very important one. We usually call it an intermediate term high. And in a bearish scenario like this, if price has an objective to the downside, these highs like this, an intermediate term high like this, is expected to be kept intact. So this is the area where your order block, the first type of order block, will be formed. And whenever you have an order block like this, you are in line with a higher time frame narrative, you have an objective to the downside, then you can look for this type of order block for entry. And the second type of order block is very simple. Draw your attention to this shaded point here. Imagine you have a fair value gap, and I believe at this point you should know what a fair value gap is. Let's assume this is a fair value gap. You have a swing low here. Price traded from the swing low into this fair value gap. It didn't just stop at the low, it didn't just stop at the midpoint. It traded straight into the high of the fair value gap, filled it completely, and traded back down. Once your narrative from the higher time frame is bearish and everything is in place, you are in sync with the higher time frame, you have an objective to the downside. The most obvious order block formed in the range like this, you can just draw it out like this. You can enter here and have your stop loss above this high, knowing that it will be very hard for price to break through and trade back into a swing high like this. Alright, I'm taking you straight to the chart now. Looking at the charts, it looks like it's chaos, it's noisy. But once we start putting in the narrative now, it's going to make a whole lot of sense. The first thing you need to do is to get your narrative from the higher time frame. Very, very important. Here I have a PD array from the daily time frame marked here. And you can see that when price traded up into the PD array, you can see the reaction from the PD array, which is very, very important. So before things like this work, you need to get the perspective from the higher time frame. You don't just come to the charts and start looking for entries. You must be in sync with what price is doing from the higher time frame perspective. So once you've done that and price trades into your PD array, it could be an order block from the higher time frame, it could be a fair value gap, any PD array that really works with you. But this is an order block which I marked from the daily time frame. So once price trade to your PD array, pay more attention to price. It traded into it the first time, rejected from it, and started consolidating. Whenever I see something like this close to my PD array, in this case a bearish PD array, and it's consolidating, what comes to my mind is that price is engineering liquidity. What I feel the big guys are doing is they are just trying to trick buyers into this market. We're going to have buyers at this low, double lows like this, and we're going to have early sellers at these highs. You want to see a manipulation to the upside. So the moment the manipulation happens like this, I wait for the schematic to play out. A short-term low to the left, and a short-term low to the right, which is what we have here. The next thing I look out for, I wait for price to trade to the opening price of this candle and for price to close below it. You see that price traded to the opening price impulsively. Now the big question is, why am I not looking at these down close candles as a valid bearish order block? Because it does not meet with the criteria for selecting a valid order block, which I shared at the beginning of this video. So price traded to it. It gave sign as if it was going to trade to the downside, but you saw that it failed. If you have your stop loss above this order block, it will be taken out. So what I'm showing in this video is something you can use to filter out bad order blocks like this that will hit your stop loss. So what you need to wait for is to wait for price to trade to the opening price of this up close candle right here, which meets our criteria. So you can see how price traded to it beautifully and rejected from it. I have an execution here that I'm going to show you briefly. The execution is just going to be like this. This is how you can catch trades like this if you've understood what I've shared so far. So the next one is this other block that formed right here. I'm not paying attention to all this back and forth movement, but if you look at what is happening here, price traded higher. After trading into this other block, I was already anticipating a swing high to be formed at the opening price of this other block right here. So why price was taking out this high, we have traders here which are breakout traders trying to enter a position here, or even traders that sold here, that bought here, early buyers. They have their stop loss resting below these lows, but at this point trading above this high and into this other block, I was already anticipating a swing high to form and for price to start trading to the downside. Because I still have lower objectives, you can see that I'm anchoring everything from the daily PDRA. So I have daily objective that had not been met yet. So I still expect price to trade to the downside. So once that happened, the swing high formed here. If you look to the left, we have a lower swing high to the left, which is a short-term high. You look to your right, we have another lower swing high, which is a short-term high as well. That makes this swing high a valid one for me. So what I just wait for is to mark the obvious up close candles here and wait for price to trade below the opening price of this candle right here and close below it. That gives me a valid order block. So, and the execution is just going to be like this. The moment price close below it, I just wait for price to trade back to it and have my entry here. And you saw how that delivered beautifully. So it's just going to be something like this. The next type of order block is the one that I frame with the help of a fair value gap. So I'm going to be showing you that very fast. I know I'm far into the video already, but I'll try to keep it as fast as possible. You are watching it up to this point and you are getting value from this video. You can support the channel. The only way you can say thank you is by letting me know in the comment section and hitting the like button. If you're not yet subscribed, you can also subscribe to the channel. All right, it's very simple, just the way I showed you in the schematic. Once you have a fair value gap like this, remember we're working in a bearish narrative from the higher time frame, so we are in sync with what the higher time frame is doing. We are expecting price to trade to the lower, we're expecting price to trade lower, and we have this fair value gap like this. See, price traded into the fair value gap, filled it completely and rejected from it. The moment it's closing below the opening price of this up close candle like this, that is where you should be entering. You have your execution here and you anticipate price to start moving to the downside. Your execution is here. Where will your stop loss be? Your stop loss is just going to be somewhere above this high, and it's as simple as that. The most important then is to get your narrative right and go look for this pattern in price, and it will surprise you that it's scattered all over on the chart, and that's why it's going to help you filter other blocks. At this point, we've come to the end of the video, and I believe you got something from this one. If you did, don't forget to like, don't forget to comment, make a comment in the comment section, and subscribe to the channel. I'll see you in the next one.